Hey everyone, welcome back to Corporate Decoder, the place where let's just say sometimes the numbers tell a story you wouldn't expect, and today's tale involves some interesting maneuvers from Biglari Holdings. Get ready for a quick dive into how a company manages its stock between its own affiliates and the public market, and a surprising update on one of America's favorite burger joints. Before we dive in, if you dig these unfiltered looks at corporate filings, do us a favor and hit that subscribe button. Also, we've got a rockin' Discord community going where we break down more of these filings. You can find the link in the description below. Alright, so this report is from Biglari Holdings Incorporated, and the date is the 21st of November 2025. It's a current report, meaning something noteworthy happened. Let's look at how their stock is structured. They've got Class A common stock and Class B common stock. These are registered on the New York Stock Exchange and also on NYSE Texas Incorporated. This distinction might seem small, but it hints at different voting rights or maybe different ways they manage these classes of shares. Now, the real meat of this filing is under Regulation FD disclosure. This is where they disclose information that could be important to investors. First up, they mention that affiliates of Biglari Holdings may purchase additional shares of Class A and FIO Class B common stock of the company. Affiliates basically means people or entities closely connected to the company, like management or major shareholders. So they're basically saying, hey, folks inside the company might be buying more stock. This can be a sign of confidence, or it could be a way to support the stock price. Then they drop a couple of financial bombs. As of the 30th of September 2025, the book value per Class A equivalent share was a whopping $2,244.26. And get this, the book value per Class B equivalent share was $448.85. Book value is essentially what the company is theoretically worth if you sold off all its assets and paid off all its debts. The fact that they're highlighting this, especially when they say the company's stock currently sells at a discount to its per share book value, is a big deal. It is like saying, hey, our stock price is lower than what our total assets are worth on paper. Investors often see this as a potential buying opportunity, assuming the company can unlock that value. It is a value investor's dream potentially, but it gets more interesting. They're also giving an update on their subsidiary Steak and Shake Incorporated. And the news here is pretty good. They say Steak and Shake is experiencing SAME, store sales growth in excess of 15% for its US operations. Same. Store sales growth means sales at locations that have been open for at least a year are going up. A 15% increase is huge, especially for a restaurant chain. It suggests that their strategies, whatever they are working to bring more customers through the door and get them spending more. This is a very positive sign for a segment of their business that has faced challenges in the past. And finally, the report is signed by Bruce Lewis, who holds the title of controller. This is just a formality but confirms the authenticity of the filing. Now, let's put on our investor hats and see what this all means. Biglari Holdings seems to be signaling confidence from within by hinting that affiliates might buy more stock. This, combined with the stock trading below its book value, paints a picture of a company that believes its shares are undervalued. This is the kind of message that gets value investors excited. A company's own insiders buying shares is often seen as a strong vote of confidence. The standout piece here, though, is the incredible performance of Steak and Shake. That 15% plus same. Store sales growth is not just a number. It means more people are eating there and they're spending more money. For a company whose stock is currently trading at a discount to its book value, seeing a key subsidiary showing such robust growth could be a game changer. It suggests the underlying business has real strength, and perhaps the market hasn't fully appreciated it yet. However, we always need to be cautious. Affiliates buying shares can also be a tactic to prop up a falling stock price if fundamental performance isn't strong enough on its own. And while Steak and Shake's growth is fantastic, we need to remember it is just one part of Biglari Holdings. We don't have the full financial picture from this specific report, just these highlights. The discount to book value is a classic value investing signal, but it can also mean there are underlying issues that the market perceives, even if they are not immediately obvious in a brief update like this. We need to keep an eye on their full financial statements to understand the debt levels, profitability of other segments, and any potential headwinds. In conclusion, Biglari Holdings is sending a mixed but potentially positive signal. They are highlighting internal confidence and a subsidiary performing exceptionally well. The discount to book value presents an intriguing opportunity for those who believe in the company's long-term prospects. The key will be whether they can translate the subsidiary's success and their own perceived undervaluation into consistent, broad-based financial improvement. Alright, that is our quick decode of the Biglari Holdings filing. What is your take on these numbers and what they signal for the company's future? Do you think this is a hidden gem? Or are there warning signs we should be watching closely? Drop your thoughts in the comments below if this analysis was valuable. Hitting that like button really helps us out. And of course, subscribe for more deep dives into the world of corporate finance. And hey, don't forget to check out our Discord in the description. Thanks for watching, and we'll see you on the next Decode.